Okay, today we discuss FI MM integration, and this is very important when we are dealing with material movement. There are scenarios. Okay, you must know these scenarios, and these are scenarios that are actually part of your interviews. So, scenario number one is purchase order is created on 1st January 2024 for 50 quantity at 100 rupees each. On 10th Jan, good receipts are done for 50 at 100 each. On 18th Jan, invoice receipt is done for 50 quantity at 110. Now, why is this difference? Because that difference can be foreign exchange difference. Okay. So the first is purchase order is created, but at purchase order, no financial entry is recorded. Had good receipt on 10th January. The general entry is inventory account is debited and GRIR account is credited. So GRIR account is your open item account because it has to reconcile with vendors and open items of other areas. Okay. And the transaction code that we use is MIGO. When stock is issued, there's no entry. Okay. When the invoice is received, that same GRIR account is knocked off with a debit. Inventory account is 500 debit. Okay. 500 because of 110 at good receipt. So inventory account is getting debited 500 and vendor account is credit by 5,500. Scenario 2 is on 1st Jan, 50 quantity purchase order is placed, is created for 100 rupees each. 50 means 5,000. On 10th, good receipt is done for 50 quantity at 100. So that is good receipt is done at 5,000. On 18th, invoice is receipt is done at 110 and stock is issued for sales at 25 quantity. So 50 minus 25 is half of the stock is gone. So good receipt, inventory account debit, GRIR account credit, MIGO is a transaction. Stock issue. Now stock issue to sales because it is going to sales, so that will be going to serve in service of sales, so that will be cost of goods sold. Okay, because it is issued at 100 rupees. So cost of goods will be 2,500 and inventory account will be credited. So cost of goods means it's the expense of selling your goods, that is 2,500. Okay, no transaction code. When invoice is received from the vendor, GRIR is debited. Inventory account is debited 250 because of 110. You have to add this into inventory account. Purchase price variance. Now this is another account, auxiliary account, which captures variance, and the credit is 5,500 to vendor. To this transaction code, which is MIRO. Scenario 3 is purchase order at 100 on 1st January. On 10th, good receipt is done at 100 for 50 code. On 18th, invoice receipt is done for 50 at 110. Stock issued for sales is 50. So receipt is 5,000 debit, GRIR account is credit. Now GRIR account will stay open until it is mashed, knocked out, and reconciled. Stock issue, all of the stock is gone at 5,000 at 100 rupees each. Invoice receipt, GRIR account is knocked out with 5,000, 5,000. Inventory account is 0. Purchase price variance is 500. Okay, and Vendor account is credit. Transaction is Myro. So the concept is the integration between FI and MM is crucial for ensuring accurate business process. The integration involves flow of information related to procurement, inventory, and financial accounting. So the finance consultant will take care of GL account, inventory account, GRIR account, vendor account, and variance accounts. Okay, we have already seen the variance account, purchase price variance. Okay, purchase price variance, and all of this is configured in OBYC. GL account is mapped to valuation class. What is valuation class? It is your material type, raw material, semi-finished good, and finished good. And there can be more classes, subclasses. Like in raw material, there will be different kinds of raw materials. But of course, for every raw material, there will be a separate inventory account, GRIR account, GL account, receipt account, issue account, vendor account. Okay. So that's why we have valuation class, which is maintained by the consultant. And there are transaction keys. What are transaction keys? We'll just see that. Okay. So the procure to pay process is pretty simple. It starts with purchase requisition, PR, purchase order is next, then comes good receipt, then invoice receipt, then vendor payments. This is procure to pay. Purchase requisition is MM area, purchase order is MM area. There are no financial entries until purchase order gets converted into GR. Purchase requisition, purchase order is ME21N, ME21, ME51, and ME51N. Good receipt happens at MIGO where inventory is debited and GRIR is credited. Okay. At invoice receipt, of course, GRIR gets knocked out, vendor gets the credit. Okay. In vendor payments, vendor account is knocked out with this credit against this debit, and the credit goes to the outgoing bank clearing account. Okay, that is procure to pay process. So let's see how SAP works in integration. Let's sign up. OBYC is the transaction code, and over here we have different transactions. Okay, inventory posting BSD. BSX is inventory posting, double click. Chart of accounts 8842. And valuation class. Now, valuation class can be 3000. For 3000, that is raw material, I believe. Raw material. Finished goods is 9903. So we'll take raw material 3000. $7920 is finished product. So you can add your accounts over here. So how do we add that? FS00. Okay. 8842. Material accounts. GRIR purchase raw material, inventory raw material, inventory SFG, inventory FG. Okay. 70702. Finished good, raw material. 7070. Okay. This is balance sheet account because this is inventory account. Okay, sort key is purchase order, and that's why we keep our GRIR account open. It is auxiliary account. This is material accounts field status group. Okay. GRIR account can be different for raw material, SFG, FG. Okay. Okay. 70700, 70702, and if we talk about our presentation, where is it? Where is it? Inventory account here, IR account is WRX. Okay, WRX is transaction. WRX clearing account. The clearing account basically are auxiliary accounts. Okay. And valuation modification and valuation class. Where is this found valuation class? Valuation class is a part of material master. Okay. In material master, we give valuation class at accounting level as well. So you should know that. Valuation modification. Let's check because it just skipped my mind. So press F1, it indicates grouping of valuation areas. Okay, grouping of valuation areas. So if you have multiple raw materials, like for example, if you're dealing with raw material like for detergent, soaps, shampoos, of course, there would be raw material for all of these, but the same department is buying it. So valuation modification can be same because it's the same industry, the same category, material type, that is raw material, which is for detergents, shampoos, because the same formula, right? So valuation modification is grouping of all valuation areas and groups. Okay. Let's restudy it again. Yeah. Grouping of valuation areas. Valuation areas is your plans to facilitate administration of table of standard accounts by minimizing number of entries. Together with other factors, the valuation grouping code determines GL accounts to which a goods movement is posted. Automatic accounts determination. Okay, so valuation modification groups your uh, valuation areas, which are your plants. Valuation class basically groups your raw materials. Okay, so just correct that. So the same GRIR account will be looking after that. Procedures. Now, what are procedures in this? Now, these are the procedures with transactions. WRX, double click, posting key. 86 and 96 are debits and credits rules. Debit and credit will be part of this valuation modification, which is grouping of valuation areas and valuation classes will be there, and it will require an entry. An entry is already there, so we save it. Okay, it's already saved. And we have other areas as well. Offsetting entry for inventory postings. Okay, exchange rate differences. Okay, freight account, taxes, purchase account, purchase offsetting account. Again, this too will be configured in the same way, but we'll have to save the rules first. Valuation, valuation class, and valuation modification as well. Save valuation modification. Over here, we give the valuation class for the purchasing account of raw materials. Valuation modification 001, valuation class 3000, and then of course purchasing account will be mentioned over here. Okay. That's how you will say you will maintain your accounts. Okay. So I don't have an account right now, but that's how we actually maintain our. Other than that, yes. Change in stock account, BS6 inventory posting. Change in stock is basically if it is used for consumption. Okay. Then the change in stock, if there is some scrapping or loss or consumption, then we use this transaction account. I hope this is clear. So we'll actually run a procure to pay cycle as well in the next lecture.